Hello and good afternoon on this Tuesday in March, coming to you live from Hamilton, Ontario, Canada, actually in Binbrook, Ontario, Canada, a little suburb of Hamilton. I am the Geeky Agent from RE/MAX. My name is Tony, and I am here to talk to you this afternoon about what is happening here in Hamilton. So I'm just taking a quick look. We got a bunch of people sitting on the feed, which is awesome as always. Frank from the West Coast. Hey, Frank from the West Coast and like way far from like Germany originally. Linda and Rose and a bunch of other people kicking around. So thank you all for kicking in. We're just going to wait another few seconds or so, give people a chance to get on and chat. It is actually pretty interesting here in Hamilton. It seems like a lot of doom and gloom at the moment. I do have my Death Star t-shirt on, just in case we have to blow things up. So I got the Death Star ready to go. But overall in Hamilton, things have been slow. Sales are down significantly, a little over 40% here in the city, but pricing is holding firm for the most part. The Hamilton market itself is a little bit interesting because the Hamilton-Burlington board comprises not just Hamilton, which is Hamilton proper, the old city of Hamilton, and the surrounding areas which were amalgamated about 10-15 years ago. So that includes Ancaster and Stony Creek. It also includes Dundas and Glanbrook, and which includes Mount Hope and Binbrook, where I am. Flamborough, which is a huge area, which included in Flamborough is Waterdown and Carlisle as well. So it includes Hamilton proper, like the amalgamated city of Hamilton, but it also includes Burlington on the west end and Grimsby on the east end, and the markets there are slightly different. Burlington and actually Grimsby too represent sort of the higher end market, the higher average price point. So their pricing is more subject to volatility when things like increases in mortgage rates happen, when changes to the mortgage rules happen, fluctuations in the market. That usually that pricier home is more affected both in number of sales and in pricing. So I'm just going to pause this little video I got going here in the background. It has our wonderful intro music and got a bunch of people. Adam, so we got Frank from the West Coast and Adam from the East Coast. I got all of Canada covered. That's awesome. So I'm going to just switch over to our little presentation here. So as we get going, this is the release that just came out from the Realtors Association of Hamilton-Burlington yesterday. As I mentioned, it includes both Burlington, Grimsby, and the city of Hamilton proper. So according to the association, our sales, the number of sales, not the pricing, the number of sales are 40.3% down, fewer than they were in February of 2017. So all these numbers are going to be referring to February, since we're just into the middle of March. So this refers to just the month of February, and it's almost 26% lower than the 10-year average for the month of February. So we're coming off 2 or actually 3 or 4 really busy years in Hamilton. So we do expect the sales to be down, but to be down by 40% is pretty significant. And we're going to have dig down a little bit deeper and we'll find out why. That number doesn't really cover the entire city of Hamilton, as you'll see. The listings themselves are actually down as well. So they were about 15% lower in the month of February. And so that will eventually have an impact on pricing as well. If listings are down, it means we're not replenishing the sales that we are having. Fortunately, sales are down, so it's leaving inventory on the market. So if you are a buyer looking at the moment, now is actually a pretty good time before the spring shows up and it does get a little bit busier. Regardless of how slow it might be now in February and January, it will be busier in March, April, May, and June. That's just the way it goes every single year here in Hamilton-Burlington, and pretty much anywhere sort of in the GTA where the weather affects purchasing a lot. So like when you're into December, January, February, we got a lot of snow on the ground and it's really cold, people tend to stay home. And that's been the case so far this past January and February. But the weather is changing, so we expect that a lot of the people that stayed home in January, February will be out on the market looking for a home come March, April, and May. So again, if you are looking for a home or an investment property or that sort of thing, now is actually a really good time to do so. So we're just going to flip through our little presentation here. And as you'll see, so the Hamilton-Burlington board puts out this chart. If you go line by line, you can have a look at it and see what you want. A lot of realtors in the area just post this chart on their Facebook pages and say things like, wow, and expect you to sort of figure out what's going on, which kind of sucks. So the information is there. I can send this chart to you if you really want to look at it, but we're actually going to look at them one by one. So we're going to avoid the main city of Hamilton just for a second, and we're going to look at the west end of Hamilton, which would be the Burlington area, out that direction. So in Burlington last month, there was a 50% decline in the number of sales. So 236 back in 2017, down to 117 this year. And I'm going to try and go quickly because there's about 14 of these different slides. So I won't go into too much detail in all of them, but we are going to have a look at some of the more important areas. So if you have a look in Burlington, the average price last February was $756,000, which is significantly above the average price in the main city of Hamilton. If you take out Burlington and Grimsby, the average price in the city of Hamilton is just under $500,000 at about $490,000, $495,000. So Burlington represents a very expensive area of the city, and as a result, they're negatively impacted when things like mortgage rules change, as I mentioned. So they saw about an 8.8%, almost 9% decline in their average price from February of last year. If we go into Waterdown, which is also on the west end, it's part of Flamborough, but it's connected to Burlington, it's also a pricey area. Average price at $745,000 declined significantly by almost 20%. Now the number of sales is relatively low. We went from 25 sales back in 2017 to 16 sales this year. So that average kind of gets skewed if the buying goes from detached homes and people focus more on townhouses. Because the number of sales is low, there's a much wider fluctuation in the change in price. So keep that in mind. If you're looking to purchase in the Waterdown area and I'm assisting you purchasing there, we'd be looking at the numbers in much greater detail in terms of what kind of house and where in Waterdown you're purchasing to really get a good idea of what's happening with the numbers. But that's the general idea. The average prices in Waterdown are down significantly this year. Dundas is also in the west end. It is part of the city of Hamilton, but it is significantly impacted again by those higher prices. So the average price was still on the low side last year at $520 in comparison to Waterdown and Burlington. So they actually saw a bump. So they saw a 37% almost decline in the number of sales, but their average price actually went up by 8.8% if you were looking to purchase in Dundas. So again, we're seeing fluctuations depending on the area that you're in. So it's not a general decline across the board. If you're into Flamborough, again, super high average price at $766, declined by 11% this year to $681. Still on the high side for Hamilton. But again, the number of sales declined almost 50% from 23 to 12. So again, that small number of sales, like 12 sales in a month, that average price will vary widely because the number is so small. One or two large purchases replaced by one or two small purchases will have a significant impact on that average price. If we go into Ancaster, again on the west end of the city, still a pricey area, $810,000 was the average price last February, and it's dropped minimally to by 1% to $804,000 last month. When you compare January to January of last year, the drop in price was much more significant at closer to 10%, but it held steady in February roughly with a 1% decline. And the number of sales, although it says it went down by 25%, we went from basically 50 to 40 sales, 49 to 37. Moving along, we're going to go look at sort of the east end of Hamilton. So just beyond the actual core city of Hamilton, we've got Grimsby. The price there, again, is a little bit on the higher side. It's on $567, and it stayed relatively stable. I saw a 1.7% decrease down to $557, but the sales stayed flat at $34 year over year. And then when we look at Stony Creek, again in the east end, we saw a 16, almost 17% decline in sales and an average price decline of about 6.2%. And again, Stony Creek was above the core city of Hamilton average at $562, and it's gone down to about $527. So if we have a look now in the south end, and that's where I am. If you're coming to Hamilton and you want to see me, you got to go south. I'm in Binbrook, which is a part of Glanbrook. So I'm in the village of Binbrook in the township of Glanbrook in the city of Hamilton, which is a mouthful. But that's where I do live. But further south than me is Caledonia, and we're actually seeing a lot of increase in activity out in the south end of Hamilton. So if you're in Caledonia, sales were down by 12%, but the average price was up almost 18% at 17.7%. In Caledonia, Empire Homes is building a ton of houses. So as those houses come online, like in most places where there are brand new subdivisions, as those houses get completed and the amenities that go with them get completed, roads, parks, schools, schools, etc., the average price will increase fairly significantly. So if you're looking to get in where the price is relatively low still, we were at 401,000. We've jumped up to 473, which is still below the average price for the city of Hamilton. You can move out to Caledonia, get yourself a detached home or a townhouse to live in, or if you're looking for an investment property, it's still a good place to buy a brand new home that you can then use as an investment property. There are HST implications with that, so check with your realtor before you do that and your tax accountant. But basically, that's the numbers in Caledonia. Where I am in Glenbrook, which includes myself here in Bimbrook, in the subdivision of Bimbrook, and actually the subdivision of Mount Hope, where the Hamilton Airport is, the prices actually jumped by 24.4%. It is the largest increase anywhere in the city of Hamilton right now. The sales did decline by almost 15%, but the average price jumped from $498,000 to $619,000 compared to February of last year. A lot of that has to do with whether or not people are purchasing townhouses versus detached homes. In the month of January last month, or in the beginning of this year, the majority of homes purchased were townhomes. So we saw just a small 4.4% increase in the average price. I believe it's 4.4 or 4.8%. But people are starting to go in and purchase the detached homes again, which is leading to that jump in prices at 24.4%. We are building 2 new schools in this area. A lot of the roads have just been repaved. The library is brand new. It's been torn down and built a brand new library. So again, in an area where there's still construction happening, as the amenities come online, as the neighborhood matures, the actual area grows in price quite significantly compared to other areas of the city that are just sort of maintaining, that have been around for a long time and that sort of thing. So that's what's happening there. I'm just taking a quick look. Hey, John Salonen from Perry Sound is saying hi. How you doing? Hope you had fun at R4. I'm having fun here in Hamilton. And Clinton is asking me about the rule changes, and we'll chat about that in a second, Clinton. But we're just going to get through some of the numbers first, and then we'll have a general chat. In the core city of Hamilton, which is what we call the old city of Hamilton, that was Hamilton prior to amalgamation. So we're talking about the lower city, just on the top of the escarpment, east and west end. So McMaster University in Westdale in the west end, and just to the west of Stony Creek on the east end, where there's Eastgate Square and that sort of thing. That's what we're looking at here. So in the west end of Hamilton, we saw about almost 11% decline in the average price from $49 to $436, still below the average price of the overall downtown city. So the west end is still a good deal. You're still pretty close to the university. So if you're looking for rental properties, that's a really good place to be. In the center of Hamilton, we actually saw them hold pretty steady, about a 3.6% increase in prices, which is pretty average. I mean, the city's just chugging along in that case. 42% decline in the number of sales. So that's right in downtown Hamilton. There's a lot of things happening there. We're going to tease it out a little bit. We're going to look at freehold versus condominium properties and see what is happening there, because the condominium properties are growing at a much faster pace than the average freehold. So when you combine them all together, it gives you a funny average price. But when you look at them separately, you can see what's really going on. If you keep on going to the east end, again, the east end is booming. We are building a GO center in the east end. So there's going to be a GO train station built in the east end of Hamilton by the QEW that has 24/7 GO train service to Toronto all day long. That's what 24/7 means. So once that is built in a few years, that is going to be the place that a lot of people from Toronto and the surrounding areas will move to or buy houses in, so they can commute to Hamilton and still buy a house for a cheaper price. So if you are looking to buy a home now that's going to appreciate significantly, I've been saying for years, my broker has been saying for years, if I had $1 million like 5 years ago, I would have bought 10 houses in the east end of Hamilton, and I'd have a heck of a lot more money right now. So a 24.7% increase in the average price in the east end of Hamilton, even though the number of sales is down. Hamilton Mountain, so just on top of the escarpment, we like to call it the mountain because we're like that. We just do that kind of thing. So on top of the Hamilton Mountain, we saw a 3.4% decline in the average price and a 50% decline in the overall number of sales. So really the pricing is staying relatively steady. You can look at things like the weather. February and January were really cold, snowy, kind of junky months in terms of weather. So that small fluctuation of 2, 3, 4% up or down on a monthly basis really doesn't mean a whole lot to me. I like to look at the overall average. So that doesn't really worry me too much at this point. And the fact that the number of sales was down by 50% really says a lot. People were just basically staying home. So if we break it out, so if we look at all the residential listings in Hamilton, so we're looking at both the freehold and the condominium properties combined. And for those who are not familiar, freehold is basically like your house, like your detached home. It's considered what's called freehold. You can do whatever you like with it. If you're in a condo or condominium property, those can be apartments in apartment buildings or apartment-like buildings. They can be townhouses, and on a very rare occasion, there are houses that are in a condominium complex. There is common space, there's commonly owned elements, or common elements they call them. So like in a building, you have things like the elevator and the lobby and maybe a pool or a workout room, and you pay a monthly fee to maintain it. You have a property management company and a condo board, and there's rules and all that sort of stuff. So that's what condos are. So when you lump them all together in Hamilton, we saw a 13% decline in listings and about a 38.8%, almost 40% decline in the overall number of sales, not pricing. And this does not include Burlington, and this does not include Grimsby. This is only the city of Hamilton. So that's why the numbers are going to be different as compared to when you look at the entire Realtor Association of Hamilton numbers overall, which do include Burlington and Grimsby. The average price actually went up by 2.4% on average. The days on market, again, much longer. It is taking much longer to sell homes, but you're looking at 22 days versus 36 days, so less than a month to basically a month, which is not a huge shift. But the listing inventory is the real story. So at the end of the month in 2017, we had 600 listings still active. And at the end of the month in 2018, we have almost 1,000 listings on the market. So that does put downward pressure on prices because people have more choice. It is a little bit more of a buyer's market, or right now I think we're what's in a balanced market at the moment. If we break it out, so we just look at the freehold properties, we saw a 12, almost 13% decline in the number of listings, over a 40% decline in the number of sales, but the average price actually ended up going up by 3.1%. So that we have fewer sales, it is taking longer to sell, but they are holding their value and actually increasing in areas. If you look at very specific areas within the city, we are still having bidding wars, we have competitions and that sort of thing. And there are other areas that, because there are a lot of listings and the market's not as busy, are not seeing the bidding wars that they saw last year, and it is just sort of a regular balanced market there. If we switch over to the condo market, however, again, we also saw a decline in sales, but only by 20%, so less than half, or roughly half of the decline in sales that we saw in the freehold market, but we saw an almost 12%, 11.5% increase in the average price in the condo market. It is taking longer to sell. The average number of days is roughly similar to what it is for the freehold market. And the end of month listing inventory has increased, but we had 110 at the end of the month in February 2017, and 153 available at the end of the month in February 2018. But that 11.5% increase in the price is the story. The condo market is still on fire in Hamilton. We're doing at least 2 times, a little bit more, almost 3 times what would be considered the average rate of increase in Hamilton, which is somewhere around 3 to 4%. So the condo market is still very busy. It's still a really good investment. It's a great place to be if you're looking to build some equity and possibly pick up a home. I just had a client who purchased a condo downtown. She actually owns a condo in Toronto, but she's looking to eventually retire to a condo here in Hamilton. So she's purchased one here. She's renovating and she'll be renting it out for the next 2 or 3 years. So she's getting her tenants to basically to pay down her mortgage for the next 2 or 3 years or 4 years until she's ready to retire, and then she'll sell her condo in Toronto and then move to Hamilton, or keep her one in Toronto and rent it out while she lives in Hamilton. And the rent that you'll probably get on that condo, which is a really nice condo, don't get me wrong, will probably cover what she's paying for her condo here in Hamilton. So that's always an option as well. So I'm just going to switch back here. So that's the Hamilton market. So we had a bunch of people chiming in. Clinton's asking if the mortgage rule changes are a big part of that decline. Maybe. What I would suggest is we're seeing the declines in areas where they're at the top of the market. And that's kind of where we expected to see the mortgage rule changes have its greatest impact. For those who aren't aware, towards the beginning of this year, the government implemented new rules for mortgages as far as qualifying. So they expanded the stress test, what they call the stress test, from people who had less than 20% down payment to basically everyone. So everyone at this point has to go through a stress test, which means even if you qualified for a mortgage, say at 3%, you had to, or at least, sorry, not qualified, but if you were being given a mortgage at 3.0% interest from your lender, you would still have to qualify either at the Bank of Canada rate or at that rate you're getting plus 2%. So roughly, if you're getting a mortgage at 3%, you have to qualify at 5%. So you have to qualify at a much higher rate, which is what that's doing, is making people have less money available to purchase homes. So at 3%, if you qualify to purchase, say, a $500,000 or $580,000 home, is the last calculation I did. At the higher interest rate, you're probably qualifying for about $480 or $490. And there's a number of things you can do to sort of work around that. If you talk to your lenders, I can refer you to lenders as well, from banks or mortgage brokers. There are a number of things they can do to help maximize what you can afford to purchase, but that definitely is having a little bit of an impact on people who are sort of stretched to their limit. So if you're qualifying for $800,000 and you're looking for homes at $790,000 to $800,000, that change in the mortgage rules definitely will impact you. For the most part, most people that are out there looking for homes, or like all the mortgage brokers and lenders I deal with, tell me that that probably affects about 10 to 15% of the market, people who are really pushing what they can afford. The overall majority of people, if you're approved, say, for example, an $800,000 mortgage, are probably looking in the $650,000 range to begin with. So that increase or that stress test doesn't necessarily impact them as greatly as people who are like right at the limit of what they can afford. So that's it for that. A whole bunch of people checking me out. That's awesome. So the market is not doom and gloom in Hamilton. We don't need the Death Star. I did bring it with me, as I mentioned, but we don't need it. It is very different everywhere you look. So places where the price is a lot higher, like Burlington, Ancaster, Dundas, Waterdown area, sort of the west end of the city, outside the city there, and even in Grimsby a little bit, where the price is significantly higher than that $490,000, $95,000 downtown Hamilton average price, is being most greatly affected by the changes in the mortgage market. But there are still plenty of areas, like in the south end of the city where I am, in Glanbrook and Caledonia, where the market is picking up significantly. The sales are down, but the average price is up well over, close to or well over 20%. And in East Hamilton, as you saw, where the GO train station is coming, where the LRT will be reaching to, prices are going up by about 25% on average, even though the overall number of sales are down. So the number of sales being down, again, I attribute mostly to the weather. I think a lot of those people who were sitting at home in December and January and February, avoiding the snow and the slush and all that sort of stuff, will be out in force in March, April, and May once the weather gets better, and we'll see a healthy spring market. So that's my take on it. That is just my opinion only. I will throw up the disclaimer here that I've used previously. So the opinions expressed are those of my presenter, that's me, and no other person, party, alive, dead, resurrected, reanimated, etc. in this dimension or any other that's out there, or any other entity. And please, please eat your veggies. Your mother really does love you. She does. She tells me all the time. So that is it for me today. Thank you for joining me. This has been Remax Geek TV, at least my version of it. I love you guys. I thank you so much for tuning in all the time and supporting me. If you need to get in touch with me, please feel free to text or call me at 289-237-9896. You can email me, Tony@thegeekyagent.com. I always answer as quickly as I possibly can. If you're looking for me online on the interwebs, I am at thegeekyagent.com. You can also go to hamiltonlifestylesearch.com if you are looking for a home in the city and have a look by all the regular stuff like number of bedrooms and bathrooms and price. But you can also look by or search by your commute time to work. So if you don't want to live any more than a 45-minute commute to where you work, you can enter all that information in there, and it'll only return properties within a 45-minute radius of where you work. That's pretty awesome. You can't really do that on a lot of other websites. And aside from that, if you are looking for me anywhere else, you can find me on Facebook, YouTube, Instagram. That's usually where I mostly hang out. I am The Geeky Agent, so just search at The Geeky Agent on any of those channels, including Twitter, Snapchat, Tumblr, and Pinterest. Everywhere you go, I am The Geeky Agent because that's just who I am. And that's it. So thank you for joining me this Tuesday afternoon. I appreciate it. If you have any questions, please feel free to continue to leave them below. I'll jump down and try to answer them, or contact me by any of those means that I listed there. And as always, I hope you have a great rest of the day. I am sure I'll be tuning in at some point later this week to talk about all things real estate. We had the RAHB Reality Conference last week, so there's still a bunch of stuff to kind of unpack from that, and a bunch of videos that I'm still editing from different presentations there. So jump here on Facebook or find me on YouTube, youtube.com/thegeekyagent, and you'll be able to look at all those interviews and videos and other things. Thanks again, everybody, for joining me. I'll stop talking now, let you get back to your day. I love you all. If you're watching me on YouTube, please make sure you subscribe and watch and be notified and all that sort of stuff. And as always, I love you all. Have a great day, and I'll talk to you soon. Bye for now.